Good morning. Welcome to Almus Market Morning. So it's been a week of big moves for the markets. Equities losing more than 4% in major markets, short-term yields in US surging by nearly 40 basis points, and oil gaining more than 6%. Uh, while escalating tensions in Europe pushed stocks further down on Friday, bond yields corrected as some investors shifted money from risk assets to bonds and gold. Also, big moves in bond has probably discounted up to 5 rate hikes by Fed this year, and many believe that steeper action has a potential to push economy into a recession. At the same time, one should note that while inflation was initially triggered by rising oil prices, it has since become broad-based, and even services inflation has been higher. This would make it more sustainable, and higher inflation may be here to stay. Despite the fireworks in yields, FX market hasn't really played along. Dollar moved higher eventually, but it was a much delayed reaction, not particularly impressive considering that market priced in one extra rate hike in very few hours after Thursday's data. Many big players may have positioned for a hot print in CPI or sensed that the resulting shock and wave rate increase to stomp out inflation could ultimately backfire and trigger a recession. Euro and GBP look well supported due to structurally short market and a shift to hawkishness by the respective central banks. So far, EM currencies have behaved well, but their remarkable resilience will be tested in the coming months as macro setup looks pretty aligned towards an accelerated schedule of Fed rate hikes and carry trades being threatened. It's been a series of negative news for the rupee as well during the month so far, starting with the budget that envisaged a huge increase in borrowings, which in turn necessitated RBI to maintain ultra dovish policy and making rupee less attractive, enhanced expectation of series of rate hikes by Fed, and finally a surge to new high in oil prices after Ukraine situation worsened. Considering this, the move of a little over 1.5% in USD INR is not significant, but what holds further is important. Technically, we have a setup that argues for more weakness, and none of the above factors are going to reverse in a hurry. Add to this, hefty fall in premiums has made import covering attractive while exporters are dissuaded. News of government filing DHRP to have the LIC IPO in March will not deter an immediate further weakness in the rupee towards 75.80. And on a break there, a retest of previous high at 76.30 is also on the cards. Only balancing factors will be intermittent selling by RBI and the dollar index that looks weak despite all the hawkishness from the Fed. Have a nice day and week. Thank you.
Thanks, CK. So basically, as already covered by you, crude oil continued to move higher on Ukrainian issue. Brent crude futures today morning dealing at 1.5% higher at $95.80 per barrel, a new 7-year high. Asian currencies are little weaker than previous close. Peso is 0.25% weaker to 51.38, while other currencies are range bound. Rupee will be negatively impacted because of a crude oil price move up. We have seen a good leg up in gold of 2.5% higher to $1865, but now dealing at 1852. It looks like there is some conversation between US and Russia that would be moderating the upticks. We still see now a support at $1835 per ounce. Indian both fiscal policy and monetary policy took an aggressive stance for Indian growth, and they immediately faced challenges in terms of higher inflation abroad, higher oil prices due to Ukrainian tension, and forthcoming tighter monetary conditions. We saw Indian 10-year G-Sec yield closed at 670 on Friday. What I see that basically these levels should take support and it should start moving higher again. We have seen a cryptos taking a profit booking over Friday and weekend. Bitcoin has seen a full $4,000 down move from high of $46,000 last week, now trading at $42,000 per unit. Today, Indian CPI inflation expected to print around 6%, and WPI is also likely to print today, and which will be in the range of 12%. Thanks a lot. Have a nice day.